Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as the Australian dollar hovers around the 70.80 to 71 handle, the pressure still remains on the downside as renewed safe haven demand after the Middle East escalation and by firmer US data, which lifted the greenback and pushed the DXY towards 98.5 because the market appears now to be trimming easing bets from the US Federal Reserve. Along with that, with the manufacturing and also a surge in SIM prices paid, that is reinforced the inflation backdrop, while the high oil adds another layer of complexity, keeping the Australian dollar on the defensive. Even though the Reserve Bank Governor Michelle Bullock saying it is too early to assess the Middle East conflicts on the economic impact, but did not rule out a rate hike this month. If required, then therefore all eyes will be on the December quarter GDP tomorrow. So looking at the technicals, they are mixed and the bearishness is still holding quite heavy on the Australian dollar. My view is that it can't, or unlikely that is, to sustain due to the heavy technicals and look back towards 70.70 and a break there, give further scope down to 70.35. I still think the market's a little bit overbought and therefore let's see, or that is the extreme range that we've seen is a little bit extended and a pullback is viewed. The euro also very heavy as it gets crushed through the support level of 117 and now looking further to the downside and looking towards that low 116 region with little upside presently in focus. Dollar yen, well, the market has jumped again. I still feel that there is a bull trap up here. Like before, I see little upside potential, but the market is still determined to push the shorts out. And if so, could see a rise up towards 115.70 and reassess from there. The sterling outlook, very whipsawed and still remains heavy on this support line, seeing the lows around 133.30. A break there could give further scope and maybe even a drop down to 132.10 as the potential of stops being triggered. The trend has picked up and the technicals have continued to sway to the downside since this engulfing candle and the break of 134.5. All eyes on the top side still for gold, possibly around 5,500 as the uncertainty in the US-Iran escalation. Nevertheless, all eyes will be on this week, the non-farm payroll, so do keep an eye on that as well. Wrapping up with oil, market is still holding to its gains since that breakaway gap. I still think it can get filled. That is back towards $67 a barrel, but waiting for the move. And also we are overbought. Well, that's a wrap. Thank you for joining me. And as always, look out the interest report, and I hope you enjoyed the great start of the day.